What does it really mean to be rich? Is it about having millions in the bank, or is it something more, something deeper? Many of us think of wealth in terms of income, but true financial success is measured in more ways than one. Today we'll break down the financial thresholds for the top 10%, 5%, and 1% in terms of net worth and income, revealing what it actually takes to reach these elite levels. So whether you're dreaming of reaching the top or just curious about what separates the wealthy from the rest, stick with us to get the full picture of what it truly means to be rich. Now, when most people think about being rich, a specific number often comes to mind. For some, it might be the image of a lavish mansion, expensive cars, and luxury vacations. For others, it's simply having enough money to not worry about bills. But what does it really mean to be rich? The answer isn't as straightforward as it may seem. Common perceptions of wealth are often based on flashy displays of luxury. But true wealth isn't just about having a lot of money to spend. It's about the freedom to live life on your terms. In reality, wealth can be measured in different ways. While many of us focus on income, how much we earn each year, net worth is often a more accurate measure of financial success. So what's the difference between net worth and income? Net worth versus income, understanding the difference. When it comes to wealth, many people confuse net worth with income. But these two terms represent very different financial concepts. Let's break them down. Net worth is a snapshot of your overall financial health. It's the difference between what you own, your assets, and what you owe, your liabilities. Assets can include things like savings, investments, real estate, and valuable possessions. Liabilities are your debts, such as mortgages, car loans, credit card debt, and student loans. To calculate net worth, you simply subtract your total liabilities from your total assets. For example, if you own a house worth $500,000, have $100,000 in savings, and owe $200,000 in mortgage debt, your net worth would be $400,000. Net worth gives you a true picture of your financial stability, how much you could walk away with if you sold everything and paid off all your debts. Income, on the other hand, is the money you earn regularly, typically measured annually. It includes your salary, business profits, rental income, dividends from investments, and any other money that comes into your hands over a year. Unlike net worth, income doesn't account for what you already own or owe. It's purely about cash flow, the amount of money coming in and going out. A high income is often seen as a sign of financial success, but it doesn't necessarily mean you're wealthy. For instance, a person earning $500,000 a year but spending it all on living expenses, lifestyle, and debt payments won't have a significant net worth. Both metrics, though, net worth and income, are essential in understanding your true financial picture. Income gives you the ability to accumulate wealth, but it's net worth that really determines financial security. A high income without good savings habits or smart investments may leave you living paycheck to paycheck, while a lower income with strategic investments and debt management can lead to a strong net worth and long-term wealth. Both matter, but they tell different parts of the financial story. Now let's dig even deeper, looking at the different thresholds when it comes to net worth. The thresholds. When we think of the wealthiest people, it's easy to imagine billionaires with extravagant lifestyles. However, there are clear financial thresholds that categorize the top earners and asset holders in a way that helps us better understand wealth. Let's break down what it means to be in the top 10%, top 5%, and top 1% in terms of net worth. To be in the top 10% of net worth in the United States, your assets need to total around $1.2 million or more. This figure includes all your investments, real estate, savings, and other valuable possessions, minus your debts. This might seem like a large number, but it's worth noting that this category includes people who may not be super wealthy in the grand scheme of things, but are financially secure. Most people in this group are either middle-aged professionals with steady careers or individuals who have been able to save and invest over time. At this level, you're likely to own a home, have a solid retirement fund, and maybe some additional investments. However, you probably still rely on your job to maintain your standard of living. Climbing higher, the top 5% of net worth in the United States typically begins at around $2.5 million. At this stage, the financial outlook starts to shift. People in this group tend to have accumulated wealth through a combination of smart investing, business ownership, or high-paying executive roles. They are often able to achieve a degree of financial freedom where income from investments, rental properties, and business ventures can support their lifestyle without the need for a full-time job. With a net worth of $2.5 million or more, individuals may have several properties, significant stock portfolios, and are likely able to take more risks financially. The top 1% represents the truly wealthy in terms of net worth. To enter this exclusive group, you typically need a net worth starting at around $10 million, though this figure can vary depending on the region or source. People in this category are often entrepreneurs, major investors, or heirs to large family fortunes. With a net worth at this level, they can afford to live a life of luxury without relying on active income. Their wealth is often built from a combination of businesses, high-value assets like real estate, and substantial investment portfolios. They enjoy greater financial freedom and can afford to make decisions based on personal goals rather than financial necessity. Across the globe, these thresholds can differ significantly. For example, in countries like Switzerland, the entry point for the top 10% of net worth is typically much higher, reflecting the country's higher cost of living and overall wealth. In contrast, developing nations will have much lower thresholds for these same groups due to different economic conditions. Now let's have a look at how much you need to be earning a year to fit these net worth categories. What it takes to be in the top 10%, top 5%, and top 1%. To be in the top 10% of earners in the United States, you need to make roughly $150,000 to $200,000 annually. This income range puts you ahead of the vast majority of the population, but it doesn't necessarily signal extreme wealth. People in this group often work in high-paying professions such as doctors, lawyers, engineers, and executives, but they may still have to live paycheck to paycheck depending on their lifestyle choices and spending habits. For example, an individual earning $180,000 a year might have a comfortable lifestyle, but they might also carry significant debt, such as student loans, mortgages, or credit card balances, which can limit their overall financial freedom. The top 5% of earners take home between $250,000 and $400,000 annually. This group includes successful entrepreneurs, senior-level executives, high-earning professionals, and specialists in niche fields. At this income level, individuals typically have more disposable income, allowing for a higher standard of living. They can afford larger homes, luxury vacations, and expensive hobbies, and still have room to save and invest. The key difference between the top 10% and the top 5% is that those in the top 5% are generally more financially secure and able to build wealth at a faster rate. With this income, it's easier to accumulate assets, put money into retirement accounts, and diversify investments. To be in the top 1% of income earners in the U.S., you need to earn at least $500,000 a year, and often much more. At this level, income is no longer just about covering living expenses. It becomes about building wealth and leveraging financial opportunities. The top 1% earners typically include business owners, top-tier executives, celebrity professionals, and hedge fund managers. With an income at this level, these individuals not only enjoy the highest quality of life, but also have the ability to invest large sums of money, create multi-million-dollar businesses, and make moves that can drastically affect their net worth. They are able to save, invest, and compound their wealth to an extent that the vast majority of people simply can't. Undeniably, income plays a crucial role in determining lifestyle. For those in the top 10%, it often means living comfortably, but with some limitations on extravagant spending. For those in the top 5%, it means enjoying a luxurious lifestyle while also being able to build significant savings. At the top 1%, income is a tool for financial freedom, allowing individuals to not only maintain an elite standard of living, but to grow their wealth through investments and business ventures. While income can provide immediate comfort and access to wealth-building opportunities, it's the long-term accumulation of assets that ultimately determines one's net worth and wealth. So, with that kind of income, how can you achieve wealth? Practical insights to achieving wealth. Achieving wealth requires more than just earning a high income. It's about adopting financial habits that lead to long-term growth and security. One of the most important habits to cultivate is living below your means. This doesn't necessarily mean cutting out all luxuries, but being mindful of your spending and focusing on saving and investing as much as possible. The sooner you start saving, the more you can benefit from compound interest, which accelerates the growth of your money over time. This principle is critical to building wealth, and it's the cornerstone of financial success for people in the top percentiles. Investing is another key factor in building wealth. Simply saving money in a bank account won't typically result in significant wealth accumulation, as interest rates are often too low to keep up with inflation. On the other hand, investing in assets like stocks, real estate, or even starting your own business can generate returns that outpace inflation and contribute to your net worth. Diversifying your investments across different asset classes helps mitigate risk while maximizing potential growth. This approach can lead to more stable returns and reduce the impact of market volatility. Lastly, the importance of financial planning and having a long-term vision cannot be overstated. Wealth accumulation is a marathon, not a sprint. Setting clear goals and creating a roadmap to reach them helps you stay disciplined and focused on the big picture. With a solid financial plan in place, you can track your progress and adjust as necessary, ensuring that you're making steady strides toward becoming truly rich and building wealth over time. So what's your take on wealth and success? Do you see yourself reaching these financial milestones? Drop your thoughts in the comments below, give this video a thumbs up, and don't forget to subscribe and turn on the notification bell for more amazing videos like this one.